MMTs, I'm sorry about the delay. Here's the Nasdaq chart again. We had some technical difficulties. What we are going to do is repopulate the chart. This will be part two of the introductory one. The earnings season is coming next week. The options expiration is there. Everything is upon us on how far that the Dow has ran to making a top. What I'm going to do is go in here and see right now. I'm going to hit 40 deltas. There we go. Let's get that out of the way. Look, there's each line. Wow, 7.64 is all the NASDAQ 100 half delta is. So that means that we have a diminishing delta up toward the top pattern in our market maker platform. We're going to talk about how this Dow or NASDAQ has not looked back, because it hasn't. And we went up in the platform. We were ascending in this breakout bar right here. So these were the major breakout points at the half bar. This is where it really started cooking at 2566.21 and gone up to that top and pulled back and held that half bar right there at 2610. What date was that? That was 12/7 of 2010. That's that part of that cycle. Now, you'll notice that each time that we pull back, those bulls went back in and made higher highs. They were buying the dips because they had underperformance records. They did not perform at the end of 2010 because 2010 was a very choppy year for a lot of them, along with the flash crash and many other things. So what we do see people as fund managers and advisory services chasing into the market along with mutual funds and things like that, and we're fueling that move higher. And a lot of the NASDAQ, there's a NASDAQ 100 with the 100 top stocks in this whole NASDAQ comp in itself, MMTs. We're very, very overbought. We're very, very complacent on the fear factor, which would be VXN, is at all-time lows of complacency. Now, having said that, with the explosive options expiration starting Tuesday, today's date is 1/15/2011. Let us not forget it, at 9:20 a.m. Pacific Standard Time. The thing about understanding market tops, as we always do in your apprenticeship, is to learn what these tops are going to be about, but what the public model is, MMT, as you know. What is the public model? It's all the public decisions, and it becomes a behavioral transaction process within the Wall Street tape. You are in a market maker school. There is no other one out there. And what you're learning is how to make a market within that public structure on a daily compounded basis and also on a 5-day basis times 20 times 12, and there's quarterly moves in there and half quarterly moves, and the public trend is where you make your money, because without their goofy decisions, you're not going to make money on that intraday level. That's what a market maker does on that intraday level. The broader part of the bull cycle in this particular part of the move, and I'm going to blow up just this part on the NASDAQ, right there where that gap was. This gap right here was on 1231. Ha ha. Here's where we started out 1-3 of the trading range. We dip down in a daily wick. We bounce. We come back. Right here is where the buy was. We pop. This is the first few days now of the actual opening year of 2011. The important thing to understand is that half of this bar right here, there it is in your market maker platform, that's 2705. We came down, we dipped it, we hit it, we gapped it, and then we had lots of people piling in right here on Friday on a daily level in the NASDAQ, because we did. And each one of the market maker lines are 7.64 per line. To the penny, you can see where the behavior of the Wall Street tape was taking place. Then you can see how you move in. And when we're strong here, then the leadership in the NASDAQ 100, all of the high beta stocks that an SMF market maker is assigned to, with the actual dollar price action, have movements along with the NASDAQ and the NASDAQ 100. Now, who cares about the public fear indicator? Who cares about that we're overbought? It doesn't matter. What matters is that we're going into a very explosive January 2011 earnings reporting session next week. You're going to have the big, big, big cap coming out. And you have Google, Apple, Amazon, Priceline, all of them coming out. Now, based on where we're overbought going into those earnings seasons, one of the things that you're taught, MMTs, are the mindsets, the public mindsets, the public myth that people incorporate, the public mindsets that people incorporate in chat rooms, off the internet, off of the media, pundits, everyone alike, is that you're the referee of all of it, because that's what you're trained to do as a market maker, and you make markets. So when that public money is coming into the market on lower volume off of the sideline, that's great, because that means that your intraday market making skills, long and short, bear and bull, ETFs, and everything we do, everything in the option management pays you great money. What I am going to tell you is, though, the warning signs. And the warning signs, MMT, is that during this explosive quarterly earnings season, is that the Nasdaq comp in the previous quarter of 2010, we had record spending levels, we had people buying this and buying that, shipments went out. So that's the kind of quarter that's going to get reported starting Tuesday. And what the bull is going to need some more to get him more bullish and more exuberantly moving in the market. And we know it. And we know what their patterns are. We know what their mindsets. Well, after 30 years of price action psychology, what does that mean? That means the public transaction. We are not that. Rather, we make markets. And the thing about it is, if we continue to make the markets higher, we're going to go to even more of an extreme level. And half of this bar right here is 27.42. Nasdaq closed at 27.55 right here. That half bar is that daily bar on Friday. If I get a close below it on a heavy red volume bar down, MMT, we would be looking for that, but it would never recover that particular half delta line in your brain. And that your ratio in the brain would start to turn the other direction. And when it does, then price action in the index would be building, and we'll be monitoring that through that explosive. When you talk explosive earnings kickoff and options expiration, we love it. We get to make markets off of the public. We get to make markets at drop down levels, $6, $7, $8, $10 below the market. That earnings season is going to be a wonderful thing, and it's going to create a lot. And if they come in okay, like we would probably say that what we look for out of 100%, 75% of the Nasdaq stocks will do good, because the last quarter was great. So what? Do you think we care? No. Do you think we care about public headlines? No. Do you think but that's where the public transaction will lay. That's the part that we care about. We care about when it's time to short, when it's time to go long, when it's time to let the winners run, and how to make a market within the market. So basically, the Market Maker School, which has never been a public model, but it is here at SMF. That's the thing that we want to be aware of. Now, this bar is going to be crucial at 2742.46 here. This particular half bar here at 2729.83 would be the drop down. And if we see the same thing that we did in the long wick, that's called the bottom up to the delta line, and bam, how right we are. We're right to the penny. The body of the bar closed above this half bar over here that was created. This bar right here just so happened to have been created on 1/5 of 2010. That half daily bar is 26.8705. Ha ha. That's the lower end of the market support for volatility during the earnings. The bulls are looking for a chance to get into the market because they have not outperformed the market. No, they have not. That's where chasing the performance comes in. That's where you've been given a gift.